Let's get straight into it. Neren, thanks so much for joining us today. Of course, when you're looking at this figure, we've got SACCI's BCI having declined by 3.8 index points, as David highlighted a little earlier, and it doesn't seem too dire on that basis. When you phrase it, the March 2012 reading is the worst since March 2009, then it certainly does.
Yes, and that's not just the only indicator of how dire the BCI's circumstances are right now. We need to exceed 100 as far as possible. And when one bears in mind that the BCI is currently rebased against 2010, 95 means that we are substantially below, or notably below at the very least, below the 2010 performance levels. And this is a trend that we initiated late in 2011 from the midpoint, and then it dramatically got worse late in 2011, and we carried this trend of being worse off from a business confidence point of view than we were in 2010 into 2012. We're hoping that the first 6 months of 2012 is going to remain relatively stable, and unfortunately March is already betraying that expectation, but we're hoping that towards the end of the year we start to see a gradual rise with a steepening of both business confidence as well as economic performance late in the year.
Well, that's the hope for the outlook ahead. I mean, what are some of the factors that have come to bear and are denting confidence right now? Because we were talking about it earlier, and you know, it's a theme that we've picked up on throughout the last few weeks, where you're getting different levels of confidence depending on the day, depending on the geography, depending on the kind of headline that emerges out of these territories.
Quite right. Our BCI does seek to be comprehensive in its coverage. However, it is still vulnerable to volatility, and that is a concern in itself, that even a comprehensive BCI that's not subject to survey influences, it's not based on expectations, it's based on a measurement of 13 economic sub-indices, and still we have volatility. It's just an indicator of the extent to which the environment is uncertain right now and lacking in direction. You spoke of vehicle sales earlier in the program, and vehicle sales has showed negative performance on a year-on-year basis, as well as in the previous month. This time round it was neutral, and one must recall that when we measure these economic sub-indices, we look at a long-term trend. So we expected vehicle sales to be doing better than they are right now. The other alarm bells came from when one looks at a year-on-year as well as a month-on-month negative performance, exports. That is deeply concerning, and again with the vehicle sales data you saw negative year-on-year export performance. Retail sales also showing negative
and that's
month-on-month
somewhat of a surprise factor, because we talk about retailers booming, we talk about a positive retail sales coming through and earnings reports coming through from these companies. Does that startle you, the fact that retail sales also show a negative reading for the month of March, and that despite some of the positive sentiment we've seemed to see gather traction in that sector?
The reason the BCI is still really negative on retail sales is because the long-term trajectory for retail sales is expected to be a lot higher than it is right now, and we need to see sustained performance on the retail sales front for it to regain its long-term trajectory. And when that happens, we will then see positive readings return to the retail sales measure. Construction negative on a month-on-month and year-on-year basis, but that's been volatile, and I don't think that's a huge surprise. What was very surprising this time round is that none of the sub-indices gave us a positive reading. They were divided between neutral and negative, and this is the first time that we've seen this type of performance in a very long time, certainly not in the last few years that we've seen this kind of negativity surround the BCI.
We were chatting to Ian Cruikshanks of Nedbank a little earlier on, and he had highlighted the fact that you're seeing such mediocre numbers come through this time round. What is worrying is the kind of implications this is going to have on investment moving forward. So let's take a look at those implications, because that's exactly where we come to crunch time.
Quite right. And when one looks at the month-on-month performance, which as I've just said is a split between negative and neutral, investors aren't likely to be immediately disturbed by that. I think the investors would look at the year-on-year performance of the BCI. I think investors now accept that not just in South Africa but across the world, we're operating in very volatile circumstances. Business is struggling to find a direction one way or the other. So on the from the point of view of investor expectations, I'm afraid this time round in the month of March, there isn't great news either, because on a year-on-year basis, March only had 3 positive readings, and those 3 came from one that's very local, which is the measure of service delivery at a local level, and it's the first time in the last 2 months that we've seen positive readings on local service delivery. And of course that's still hampered by a low base effect, so nothing to get excited about yet. One would like to see that sustained on a longer term basis. But we also have positive readings on a year-on-year basis in terms of real financing costs and precious metal prices. So a pointer to the mining sector and the potential that holds in terms of realizing investor returns. But other than that, all the other sub-indices that we measure, manufacturing is neutral right now, which I suppose is better than it being negative. Some potential there for those who are willing to take a longer term view.
You talk about that potential there with a longer term view, but the report also saying sustainable higher levels of business confidence needs a solid economic base driven by sound structural economic fundamentals, and certainly doing that picture or that landscape no favors are the current downgrade threats coming through from the ratings agencies. What do you make of those kind of comments that have come through from all 3 agencies, because it certainly gets business to think harder about the kind of operating environment they're operating within?
Quite right. It's a challenge to business to be bolder about investment opportunities and try to change that outlook. But I think it's an even bigger challenge to our policymakers in terms of the weaknesses in our policy and fiscal environment that those agencies are pointing to. Some do argue, and I think there's a lot of strength in the argument, that the agencies may just be hedging their bets in the event that South Africa takes a turn for the worst, because we've been dawdling along for so long with the lack of direction in terms of economic performance. But this is not to be taken lightly. We're living in a world where liquidity is scarce, and South Africa is hugely dependent on foreign capital inflows, so one needs to be very cautious about achieving an actual downgrade in our credit rating. The intermediate step that now remains between the change in the ratings outlook and an actual downgrade is for South Africa to enter onto one of the rating agencies' watch lists. So that's the next step that we would definitely want to mitigate, both from a business point of view as well as from a policy leadership point of view.
Of course, you highlighted earlier what the hope is for this index to do, for the course of the year. What are prospects looking like for stability, though, given the current global environment?
Well, the global environment has always been a wild card in terms of BCI performance, but we're still optimistic that there will be improvement towards the end of the year. It is also possible that our local environment escapes the substantial influences or volatility of the global environment. It's a possibility that unfortunately has failed to realize in the last year or two, but we're still hopeful that could happen in the coming year. 2012, as you've mentioned earlier, has entered with some sparks of optimism that we haven't seen before. And I think the key factor now, the key determinant as to whether the BCI acknowledges those sparks of optimism is their sustainability into the coming months and at least until the middle of the year.